Biz people, it's the Market Sniper. How are you doing? Good to be with you. Yep, it's Monday. Often a bit of a weird day to go live. Things haven't happened. We've just had a weekend. Well, there's something to point out to you. And we also have three big predictions for you for 2026 that we are going to be making. Some of them lead off what's happening right now on the debt markets. Glad to be with you. Thank you. Thank you for hitting the likes as well and smashing us up to fool the algorithm after that false start. So live. What are the primary thrust of what we're going to discuss today in terms of the heading is there's something going on in the debt markets. And this plays into the templates we've always provided you with. It makes absolute sense to us, to everyone else. It's unusual market behavior, unusual, spooky stuff. There's spooky stuff happening. Why is there spooky stuff happening? Because people don't understand. People don't understand what a debt-based collapse means. A debt and fiat-based collapse means the devaluation of debt. You are going into a December where it is almost fait accompli. Fait accompli is a fancy French way of saying it's a given that you're going to get a rate cut. Virtually 100% in December. The numbers coming out, bankruptcies, job cuts, it's all misery central doomer stuff for America. It's all quite scary. It's all quite bad. We expect this. It's not a shock for us in our hyper stagflationary model, by the way. And that is we're having crowding out of funding. All the funding is being pushed into a statist industry of AI. Robotics and AI are designed to replace you. That's right. Once you become superfluous, you'll be done away with. That's right. That's what we're saying. We actually believe that. It's what's happened before. It's what history has shown us. It's very Bolshevik. It's very typical of supremacist Bolshevik communist pigs. That's what they do. They're murderers. But they keep you alive when they need you, when you represent labor. When they don't need you, they get rid of you. Anyway, that little reset comment aside, that little cheery moment for your Monday morning. They're coming to get you. They're coming to kill you. That's how it goes. Yeah, never mind. Live on for as long as you can. Be a pain in their ass for as long as you can. That little point aside, they are fait accompli, giving you a rate cut December. They're giving you a rate cut on December. But the market is saying, hey, bond go down, bond valuation go down, rates go up. But hold on, the chief Satan, the head of the Fed, is saying, we're cutting rates. The market's supposed to listen to him. Aren't they supposed to listen to him? The market, she say, no habla español. We don't speak this Spanish that this Federal Reserve man is speaking. We say up, you say down, we say up. What does that mean? They are not in agreement. In other words, the Fed is trying to say, well, the bonds are more valuable, you see. We need to stimulate the economy, rate cut for the economy. But that actually means we also are making the bonds more valuable. You should rush in and buy them. They're more valuable. They're going to pay you less money. There's a whole bunch of them coming down the chute at a parabola rate. We're going to pay you even less interest on the garbage money. And we want you to buy that story. And the bond vigilantes, as they're supposedly known, are going non-buyer. In actual fact, we're going to sell the bond. And in the actual market, the market's going to go up. So this is all held a whole bunch better if we actually show you with the help of a share and screen. And we'll pivot over to yours truly, the 10-year. So since we've been basing down here at the 10-year. So let's try that again. Weekly bonds, US 10-year. That's what we're looking at. Let's go fat cokey so everyone can see. Half of you are as blind as a bat. No, I don't mean that. It's only me that needs cheap $5 spectacles over his fancy glasses to see properly. 1 week 10-year rate on the US Gov Treasury has bottomed out at, you guessed it, the 4%, pretty much as we suggested. We had a lot of people that were bragging, a lot of people, pristine collateral, foreign buyers wading in to buy bonds during this period that the rates were going down and bonds value was actually going a tiny bit up. And we've always said to you all along, you are in a macro continuation pattern that is going to see upside in the end on the rates, which is debt devaluation. That is your big old structure setup. and you're now supporting here, and you're working your way off. In fact, if you look at on a lower time frame, please bear in mind we are on weekly at the moment. If you look on a lower time frame, not only are you bottoming, key level of significance just run the 4% mark. Not only are you bottoming, you're forming a structure that is popular with us as a reversal structure. And we'll tell you it's a slightly more complex than the typical inverted head and shoulder. Let's drop it to 3 days and we can expand. Let's go the whole day. Let's go the daily in full. And we'll show you that you are battling for highlighting key levels of interest and significance. Look for a nice round number. Boom. You can see support there for the flag that you had kind of ish. Then you had support there over there. Let's just highlight it. And then you broke with momentum. There is our first left shoulder. You rallied up to marginally lower low. Unlike normal Dow theory, it is not beneficial to make just a marginally lower low, especially if you return to the similar level up top there. You churned for a bit and you went down and failed to make a new low. So you now have a W bottom here right now. You have a W bottom with a shoulder. So it looks a little bit like that. Our prediction would be maybe rate cuts if they make quite a dovish statement, given how weak things are getting. You might, in fact, find that you sell off a little bit on the rate cut. You might actually pump on the rate cut. Who knows? But there's scope technically shoulder over there. And then you start to reverse back up. Why? Because things are illustrating that inflation is getting very high. And of course, the debt needs debasing. So you've had a little bit of an increase in rates to stop the dollar from going down previously. And now you're having cuts coming and the dollar is staying relatively low. We've spoken about the Dixie. We'll have a look at it again. But it had been firming and it was just sticking a nose above 100. And then it's been selling off back down. It's in an entrapment space, which we'll show you in a minute. But overall, we expect a turning away from the 4% and heading to the 4.25%, the 4.5%. And our big prediction of this year, the new year coming, 2026, is actually the same time next year, or let's say the 31st of December, as you roll to 2027, you will be at higher rates. Hear me now. The bond market will be at higher rates. That is our prediction. And in fact, many of them will be heading to and through 6%. That's a big, big statement to make. To and through 6%. In short, debt debasement is about to have its next run. You see, by the time Paul Tudor Jones and Stanley Druckenmiller told you about their position short, which was at the tail end of 2024, that's when the trade stopped providing any alpha. It actually went nowhere for a while. Let's just show you that on TLT. And we'll come back to our 10-year in a minute. TLT over here, it's a long term, so it's 20 years and above. And the long term is even more exposed, by the way. By the time they spoke of it, this was our draw. Let's just take some of those lines off. It's quite an intense chart. Or go weekly. Let's go weekly. By the time you heard about it, November of 24 over here, actually not that much has happened of great money making. You heard the tail end of 24. Tudor Jones started speaking his book and Druckenmiller. Now, they might have got short slightly higher up. They didn't get, I doubt it, because they don't have HVF method. They didn't get the inverted HVF with the slap in the face structure that is deeply ascending and very confusing that set that initial up. And I don't even think they got the head and shoulder, which was the resumption here. Those were the best parts of the trade. They might have, however, got involved somewhere during this period and started talking their book when they needed others to come and push the market down. Not very effectively. You aren't really at a new low. You've got, since November 24, you're only marginally lower. It's not been the best part of the trade. This was the best part of the trade. That was the best part of the trade. this little minor rally when the rising wedge, that was one of the best parts of the trade. We need it in pink so that you can all appreciate it. There, and there, and there, and there. Here's the winning parts of the trade. The fast moving breakout where the cost of carry is more than compensated by the profits that you are making. This is a marginal trade, depending when you got on, and that's when they started talking about it. We, of course, were talking about it at the tail end of 2020, as the inverted HVF was breaking first in a new trend with massive overperformance expected. Rally at the key level that you'd been shown at the neckline right there. Perfect setup. We got back short in there. Wow, wow, wow. You can do this too. HVF method is the methodology that we utilize, and you can watch me utilize in the market. Bang, click the link below, and it's one of the first, and you too can book a call and find out more about how and what we're looking at. But anyway, that's what's happened on the TLT. But on a bigger time frame, now I'm not going to tell you the 10-year is guaranteed at 6 itself, at the year end. It will be well on the way there, is my view, if it is not there already. Why? Because we are going to probably make, here's the big trend turn, and this is the big trend turn in bonds. This is where you are, you're here. Now, it might go a bit slower. It might go a bit slower. There is ways that we could be, it could only be marginally higher. And how would that be? Well, if we changed our perception of this draw to something like this, what if that's the draw and we just ignore the Trump tariff tantrum, then we still have to go up for a 3 and come back down. So that could take you quite deep into 26 before it happens, and then you break out. So you could chop around in the range, but generally higher. This is a localized low call that we are making. In short, as we've always said on this channel, rates are going to go progressively higher. Even the cuts, when they come, will be shorter, smaller, not as long. And the hikes, the market, the bonds' actual trading price in the market for who wants them will show you that they are going to go higher. By the time you meet this, you will then run a risk of a major move up. That could be coming. It could take 12 months that the move is really happening. And you'll refer back to this video a year ago where we tell you December, you will be higher than you are today. And I think quite significantly. And quite a lot of that could be happening in the tail end of December. Inflation is showing its head again. Let's just show you some things on inflation. What about, I don't know if any of you have been noticing, beef prices. Let's have a look and see if we can find that one over there for everyone to have a look at. Ground beef prices under Trump. Well, it's not just Trump. Let's take a look at this chart. And you've been, let's just call it average price ground beef, 100% beef, cost per 400, and that's a very unusual number of grams. I'm assuming it might be a pound. Or something like that, around a pound. So you were just over $1 where that was $1. So you're about $1.25. And today you're about $6.25. How about that since 1985? And when have we really accelerated? Well, post the crisis of subprime with all the printing sure helped move things along. And then, of course, the 2020 print was one of the biggest ever, and you've done exactly that. So that's your rate of ascent. So since the 2020, many of you might not have been around in 1985. Since the 2020 print, though, you will have been around for that, and you will have seen that the market has taken you from $4 in 2020 to $6.25. $6.25. That is pretty unheralded, I would argue, and not very, very pleasant at all. So I'm going to check what you guys are asking on the chats as well. Please don't forget to put your chats in there. Let's have a look at what the chats are going. What do you think? What's the price of beef? What are you finding? Are you in a real low inflation environment? Does that really seem to be the case? Our model has been one of hyper stagflation. Hyper stagflation. What is hyper stagflation? Stubbornly high. In fact, we have a definition for this. And it's also here, so we'll say goodbye to our beef chart with Lynn Alden, who's now a Bitcoin will fix everything kind of person. Very smart lady, but it's pity she pivoted that strongly on the NSA token. Must be paid by Backed or some other business that is Bitcoin related. Let's point to what were we wanting to look at? We were talking about beef. We were talking about, what were we talking about? I was going to go find you the hyperstagflation. That's right, hyperstagflation. What is that model that keeps being validated for us? It means stubbornly high interest rates and cost of living at the same time as it's funny, we talk about it a lot. It takes 3 before we finally find it, and it's not even through one of our own. There's my hyperstagflation visual for you all. I hope you like a little bit of that potty action. Here we go. That's the thumbnail I was actually looking for. It's an extreme form of stagflation. So the hyper is just going like turned up to 11. It arises when consumer demand is weak. How do you find the consumer demand? Are you running a small business? Are people queuing outside to buy your product or service? Most households experience little or no real growth in disposable income. So real terms, remember. So now your wife is working as well, where previously 3 decades ago, just a man could support an entire family. We've done away with the patriarchal model. We've thrown the ladies into the workforce. We've now got double income, and we're now paying twice as much tax. In fact, 3 times as much tax, because there's 2 people paying 1.5 times more tax than they used to. And we find that we're even struggling now, and we're paying somebody else to look after our children. Economic growth remains low in real terms. Real terms. You're being lied to about the inflation rate. It needs adjusting for the inflation rate. So while inflation and currency debasement stay persistently high, the target is 2%, but you're sitting at BLS liar number 3%, and they're cutting rates. Just think about that. You're 50% higher than your target on a liar number that understates inflation. Let me say that again so that everyone understands. Sometimes I talk fast. You are over 50% higher than the target inflation rate, which got increased, by the way. It used to be 1%. So it got increased by 100%. You're 50% over the increased target of 2%, knocking the door at 3%, and that's a massive understate on the true level of your real inflation. So that's why you think you're getting growth, but you're not, because you should be rebasing it downwards by a substantially larger amount than the 3% you're being given. So inflation and currency debasement stays persistently high. This is the debasement trade right there. As a result, the average man in the street is squeezed by stagnant and negative real income. So your real income is actually going down because the cost of the things you need to buy to live are going up faster than your salary. That doesn't mean your salary isn't going up. It's just not going up very fast relative to your costs. Hyperstagflation typically occurs in heavily financial leveraged nations that have relied on debt-fueled expenditure. The last time the US experienced this, they were carpet bombing more munitions than all of World War II in a jungle so far away people never noticed it was happening. And that led to them removing the gold as a fix when everyone else, other nations such as France, said, bullshit, you're printing dollars and you aren't printing the gold to go with it. You haven't found the new gold. You're sending out more dollars than gold. And as a result, they called them a liar and started calling for the gold. And Ponzi-onomics being Ponzi-onomics, there was a run on the dollar because it was true. You see, that's the great thing I love. If you want to know, Francis, the biggest thing I'm interested in is what is the real hard truth? I can eat it, as ugly as it is. The fact that we have a political system run through Israel, blackmailers, paying off lackeys that are all caught in compromised positions with children. I can eat that. I want to know the truth. I want to know the full truth of the situation. And you see, the thing is, when people are focused and motivated by self-interest and they know information. They move things to preserve their money, and truth doesn't out. And that is why Nixon ended up unhooking the dollar to the gold price and going full float, because he was cheating. America had lied. Kennedy, from all of them, the whole war was a scam. No one wanted it, but hey, we're fighting communism far, far away. We must do it. Napalm. Let's burn a few people alive. There's no morality in that. These warmongers and military-industrial complex are soulless human beings. They're the same people that nuked citizens, not military people, citizens in Hiroshima. Hey, let's test our new tool. We've got an excuse. It's still officially a war. Hey, but they don't want to fight anymore. They'll sign a surrender document. Trust me, for anything, any terms, it's over. They accept they've lost. No. Don't sign no document. Must test our tool. Must test our tool. How many people? Let's go to the citizens of a Christian area that threw out all the chosen ones. Teach them a lesson. Let's settle some vendettas and scores. Here, Mr. Hiroshima and Nagasaki, here's us testing our bomb. We're still in a war, you know. It's justifiable. We're saving American soldiers. They wanted to sign already. You liars, you liars. And so they tested other tools in Vietnam. Hey, how about a bit of napalm? Let's roast some folks. What do you think? Yeah, let's do that. But it's a breach of the Geneva Convention. Nah, don't worry about that. Napalm from planes, flamethrowers. Let's go, let's go. They're hiding in holes, damn it. It's difficult. Let's flush them out with a flamethrower. Yay! What about Agent Orange? Let's poison their land. Let's poison their children. Let's make it an absolute nuclear fallout zone for decades to come, so that kids are born spastic. Yay! Let's do more of that. Those are the people we're talking about. That is the truth. That is the real truth of the world and how they are running it. So if you like truth, here's the truth. You are in hyperstagflation. You need to understand the template to understand what to do. If you do not understand the environment, you will not understand the remedial action. If you are dying, it matters whether you've caught on fire from a flammable good that will be put out with water or put out with sand. If you don't want to know the detail and you want to hide because it's too ugly a topic, sniper, you're dooming everybody. Truth is dark, my friends. Truth hides on the perimeters, not in the middle where everyone can see it. It's covered. It's like a rat in a barbed wire cage and down a hole. You have to find it on the perimeter. That's where it lives. The real truth when you're dealing with psychopaths is dark. Attempt to subsequently manage unsustainable debt levels through financial repression policies. They are screwing you for the excess debt that they built. That's how it works. You're the patsy at the poker table. They are hitting you for their policies. Who got all that excess money? They got all the excess money. So they stole from you when they did it. It went to the military industrial complex, the pharmaceutical industrial complex. We need chemicals to burn people alive with. We want Agent Orange. We want this. Hey, let's spend. Let's have skunk work budgets to find more creative ways to cause more pain to fellow humans on the other side of the planet. Great, let's do it. You are paying for that. You're paying for 1971, you're paying for 1991, you're paying for 2001, you're paying for 2021, along with 2011 as well. And guess what happens? Gold price is the only thing that they don't control because they want to preserve their wealth as well, and they tend to move towards what preserves them. They move to what preserves them. The fiat currency, real economic growth may be very low, and it could even go negative. Our view, if you get an AI debt-based crash, in 2026, you will have disinflationary events. You will have a very negative economy because now the whole world, the most important thing is AI. A gentleman called Sachs, the czar of AI, is there to tell you it's the most important thing that we keep the AI gravy train pumping and running. It's become mission critical. It's now important for you that you pay for your surveillance finance system, you get indebted for the surveillance finance system, that they devalue your fiat for the AI robotic surveillance finance system that they are building with biometrics and everything. It's so important that you pay for your own future prison that they might encourage further debasement and government bailouts for that industry, because your future prison, there's nothing more important than that, according to Sachs and other supremacists that have decided how you will live, captivated, surveilled, with zero privacy. That's where we're going. Such periods are marked by real financial struggle for the everyday people, and often social unrest. And they will weaponize that social unrest, by the way. They weaponize everything. They know what's coming. They create the kindle nice and dry and hot, and then they throw the match. And they know where the fire is going, and they direct it. You have elongated muskiness on the Muslim man bad. Now, don't get me wrong. If you've immigrated to a country and you've raped underage girls, I want you to hang. It's quite simple. I want that justice. But you've got to ask, why is he supporting Tommy Robinson? Tommy Robinson, Nigel Farage, and all of this. Why is he supporting that? They want civil unrest. They want you to storm the immigration centers in a violent fashion so that they can declare martial law and get approval for biometrics, track and trace, and say, we needed to do this to preserve the peace. They immigrated the counterparty. In some cases, they villainized them. Sometimes, in some cases, they didn't have to do it. They did it all for themselves. And then they turn you. They smash A against B. And who is the third force? It's force number C. The people that brought them in there, the judges that are giving them low sentences while sentencing you, creating a two-tier justice system. The whole game is provocation of the indigenous people. That is what they are doing. And they will ensure the social unrest will cover. They will do the most heinous, allow the most heinous crimes to go unpunished in some ways, and the most simpleton, ordinary things to go heavily punished, until you realize you are hated and loathed, and they intend to provoke you. That's what they intend to do. Then the eventual social unrest that they get triggered, courtesy of Elon's, hey, fight, fight, fight. That's not how you fight, by the way. It's not how you fight. So the social unrest is being weaponized and will be used to upload your biometric system. So Biden brought the immigrants in, and Trump says, well, we're going to need a voting system, a biometric voting system, to ensure the wrong people aren't actually voting. The demand for labor tends to weaken. Jobs are bad. What's happening in the job market? By the way, December the 16th, live trading day with us. That will be non-farm payrolls. It is not on the usual first Friday of the month. December the 16th, you can join us. We will have a link. We will share that link over X as we get closer to the date. You can come and join it with us. And our guess, weakening job market, weakening job market. But hold on, weakening job market, bond market going up. What's going on here? Rates are supposed to go down when the market is going down, when the jobs are going down, when real wages are moving very slowly. Commodities and physical assets, particularly the under-leveraged ones, so I'm talking like beef, not so much housing, commodities and physical assets, especially the monetary metals such as gold, silver, and platinum, all tend to appreciate. So what you're finding is there's been a turn in natural gas. Now, don't get me wrong, we're monetary metals before the energies, but eventually you roll into the full-blown commodity run. That is the inflation part, the inflation of the hyperstagflation. Within a very stagnating environment, you have surprisingly high inflation. Not double digits to the moon or triple digit necessarily. You might get double digit, that's fine, but not necessarily the hyperinflation. Hyperstagflation does not mean hyperinflation. It means a hyper version of both stagnation and inflation, a disproportionately high inflation level for a very weak economy. That is what you have. Typically, those things aren't meant to occur, but in a debasement era, they absolutely do. So whilst financial leverage assets like housing might stagnate, they stagnate, especially if you measure in, what do we measure in, guys? What is our unit of account for measuring our wealth? Gold ounces, gold ounces. So because I've lost some strength since last week, I'm doing my shoulder presses with a slightly smaller one, but beautiful it is nonetheless. This is a silver ounce, 10 ounces. 10 ounces of pure beauty. You can buy, just like we do, utilizing our links below to support our channel. You'll pay the same price as I do. Pure gold, Bullionvault, for keeping you mobile, so you can have it, you get the upside, but when you move to your new environment, you want it delivered, you can have it delivered to a new address. For those of you that might be in transition, Bullionvault is a great solution. Link in the description below. Bullionvault, open an account, start stacking, and they do no hypothecation, and you can even reserve bars by serial numbers if it's going to be a while. And you can then sell, you can have all the upside and then sell and get your physical delivered at your new site if you're crossing border. Do not try to cross borders with more than a certain amount. Check your local borders for that. They will pull you, and that is going to get more and more strict, not less so. Hence the value of Bullionvault. Also, UK now, Pure Gold now delivers in the US as well. You can buy, it's a locally delivered item. So borrowing starts to withdraw and becomes harder to secure. So housing market gets hit in this environment, friends. Hyperstagflation. Housing market in gold ounces is definitely going down and may have periods in nominal dollar terms even that it's going down because the access to borrowing is reducing. The access to borrowing is reducing. It costs more. The fixed cost, the organizing, all the fixed costs that banks want to load will go up. They're not competing for lending business now. They almost don't want it, but they have to offer a product. They're going to gouge you on those costs, and rates go up higher. And if you fix your rates, which is what you should be doing to protect you against upward rate moves, debt debasement, rates up. It is that relationship. Do you remember our seesaws of a year or so ago, showing you the value of a bond and debt interest rates? If the debt is to be debased, which it is, then the bond rates go up. I will be showing you the Dixie and what we think could happen and why it isn't necessarily only up, because we've had dollar weakness. We've had debt actually be stable for a while. You saw the TLT. We think the debt's going to start devaluing again, and that means rate rises. Well, I'm still reading from here. So corporate and personal bankruptcies are going to climb. Lots of restructuring will occur, haircuts for creditors. Governments often respond with austerity measures as fiscal pressures intensify. So austerity measures will become the norm. Now, Britain will say we've already had that. Well, you're going to get it times 10. America's yet to really feel and have it named, but it will come. What that means is much less will be done for you by government. Your refuse pickup will reduce. Lots of other things will occur. Retractment. Subsidies, etc., etc. A lot more is going to be required for welfare, as elderly people who never prepared for hyperstagflation, that weren't particularly financially astute, thought they had enough pension, only their currency is being debased. They contributed at great hardship to themselves. They were put in terrible debt instruments. They didn't go up. Oh, we've got to have a look at Trump, by the way. We've got to have a look at Trump bragging, or the Treasury bragging. We've got to go look at US Treasury. What did US Treasury say? Oh, I'm being prompted here. US Treasury Department. What did they say? Here we go. US Treasury Department wanting to be political, it seems. US Treasuries are having their best year since 2020. We had confidence and faith in President Trump's economic policies and have been richly rewarded. Never bet against POTUS or America. I'm afraid I'm definitely betting against POTUS and American debt, not against the American people, but against the debt. So we did a response to this. And I can tell you that the dollar went down 9.63% in this year. So you see, fiat and debt, 9.63, including losing 18% to the Hungarian forint, 40% to the ruble. Well, it's 38.7, basically. 38.7%. The country the West is doing sanctions on is making more money, and their currency is climbing. Their oil is going via Indian refineries, and Germans are just paying a whole bunch more for it. Cause sanctions, cause Russia bad. Imagine that. This is an extractionary mechanism designed to collapse Europe. I think they want to really rush on the collapse of Europe. They've got to break Germany. Germany has been the spinal column of Europe, and they're doing an amazing job on the controlled demolition. The phrase that you heard here first on YouTube, other people have written books, other people have used it, but we talked about it consistently, the controlled demolition of intent. There is no person with any economic sense that does any of the policies that are being pursued in Germany. It is a controlled demolition of intent, and it will break the euro. The Italians have written up laws to say that the 2,500 tons of gold that they have is Italy's gold, not Europe's. This is a precursor to somebody being clear about their slice of the pie in the event of people going separate ways. It is a fact that the EU will collapse. It is a fact that it's coming, and it is part and parcel of the Western control. The only thing that will save some of the blushes for America is that they're going to roll up an entire Western hegemony collapse with the American base collapse, so that in the end they'll say, well, it wasn't just us that fell on our backsides too. Don't be fooled. The hegemon falls hardest from highest. Hear me now, my American friends. I don't wish it. I just tell you how it is. By the way, the dollar was down in a very similar amount during this period. So literally, it's a question of which one do you want to debase? You are fiat, and debt debasement is the only thing that can happen. There's too much of it. Something that is coming thick and fast does not appreciate in value. It's oversupplied. It's grossly overpriced. How do you want to debase it? As I've explained before, we've drawn the gas canister with the heating underneath it and the two taps to release the pressure. It's either the currency or it's the debt valuation. During the period here, they allowed the debt to devalue. Bidenomics. During Trump, they've weakened the dollar. The dollar weakened 9.6% to most currencies on average. The Dixie is down 9.6% this year. That's 10% lost buying power compared to other crappy currencies, including the European ones that are in a similar debasement crash crisis. The only real percentage that should matter is what did gold do this year? And we'll be coming back to that to show you how much, in truth, your dollar lost in buying power against real money. Not other idiots, real money. You're sitting in the class of failures that are all failing. Don't say, I didn't fail as much as him. That's scant prize. You are a failure. You're in the failure class. They're all failing. And the dollar over-failed relative to a bunch of other failures. In the other class is gold, silver, and platinum. That's where the smart kids sit, not the fiat class, not the debt class. That's where the idiots sit. That's where all the dollar maximalists that wax lyrical about massive foreign demand, and then you find out Cayman Islands, a CIA, NSA, tiny little golfing resort for those that were ex-bankers and tied to the security services, all sit and play monkey business with monkey money, with monkey levels of leverage to support a Ponzi. But hey, foreign demand, George Gammon and Brent Johnson will tell you, is robust for treasuries. Look at that. Look at the bids, covered 3 times over. And then you find out at a little island with a 7.3 billion economy has the better part of 1.8 trillion in foreign debt. It's not so foreign. It's American. Cayman Islands, well. It's a little speck in the ocean. As I've said before, it's the same as you on 250 grand salary having a 68 million bond portfolio. How likely is it that? How likely you would have 68 million of anything, and how likely it would be that you all put it on bonds, and how likely it would be that primary dealers would facilitate daily loans utilizing the repo market, no less, and roll your debt so that you could get so levered to own 68 million on a 250 grand salary. That is 7.1 billion to 1.8 trillion. That's it. How likely? Well, because they need it that way. They're frauds, they cheats, and they keep frauding and they keep cheating. Known liars lie. It's not valid. It's not common sense. It doesn't make mathematical sense. It is a minuscule return game that only extreme leverage produces. And if you were truly to have real risk of contagion that wouldn't be backed by the Fed, no one would be doing that trade and getting access to that amount of leverage. Try call those same banks and say, I would like 1.8 trillion in leverage to buy up the silver and gold and platinum markets, please. Let's see the replies you get, especially if you weren't part of the CIA NSA financial access that plays golf in the Cayman Islands with Raoul Pal. Okay, there you go. That is Trump's hero moment. The biggest decreases in the dollar during 2020 and 2025. Yeah, so let's show you that. I stopped sharing. Let's share that chart. I probably stopped under instruction. Let's show you that right here. There you go. So you can see it too. There's the tweet. There it is. Trump and the Treasury market telling you how good they've done. Treasury Department, never bet against POTUS. POTUS, it sounds like a very stupid animal, a POTUS. It sounds like a tortoise that's impotent. There we go. America, POTUS. Never bet. And that is virtually minus 10% on the Dixie. So you didn't even get 10% in return, but your currency was down 10%. You lost value. And that's measuring it against the euro, not against gold. You lost immense value. You were down 7% in this year as well. I'm not batting for Biden, don't get me wrong, but at least they showed how much it lost. The debt market lost the better part of 17 or 18% there, plus a further 5 there, plus it lost there. That's right. So there you go. You choose your release valve, the dollar or the debt. And here's what's happened. The debt has not gone down in a while, and the dollar has fallen immensely. So let's pivot to the Dixie chart so that we can see all that you want to see about the outlook for the dollar. Yeah, so here we go. Dollar, Dixie. So we've had a bad spell for the Dixie, which is why it's the debt's chance to lose some value. We've shown you this chart before, and this is on the weekly time frame. Let's go log scale because it's a big time frame under review. And you can see that you are in an entrapment area of the 100 over there. And this long-term trend, a basing, ascending grind line, which is the lower level, that has a weak ascent climb for the range trade of the dollar. And you are stuck in here. And every time you've met 100, you've been sold off back down. More of this entrapment trade, because the dollar not specifically going down, I would expect debt to start to be weak. Weak debt, the debasement goes through the debt, rates go up. Rates go up as Powell, probably in one of his last major acts, is going to cut rates in December. He will be replaced by somebody who is going to be a doormat for rate cuts, I expect. Only problem is he's going to be caught between a rock and a hard place. Kessler, I think his name is, and he will have a real tough time because he's going to have the bond market ripping towards 6%. Overall, December next year, you will be a lot higher. I'm not saying the 10-year will be 6%, but you'll be a lot higher. By the way, the same goes for the Japanese. We called 6% in 2021 when it was 0.79 on the Japanese rates. What does that do to the carry trade when the yield required on the Japanese debt, what you have to pay for borrowings in yen that has been invested in Casino America, has to be paid back when the rates are climbing up to 6%. We'll be showing you that too. And that is why the yen's going to start weakening So the dollar's weakened and the debt has flatlined because you had Druckenmiller and Tudor Jones go public. They couldn't have everyone making profits and jumping on the trade. TLT gone sideways mainly, a little bit down. It's the dollar that's crashed this time. Now the Japanese yen's rates been climbing ever higher up, and we had a pullback on the USD JPY trade. We also gave you, not that long ago, about 6 months ago, July it was, the Swiss franc JPY trade. What an absolute screamer that one has been to the upside. Here you are. We'll show you this, and you can see a beautiful upside day today. We'll probably have some community members in here. We are long the USD JPY, not because we bullish the dollar. We just want to pass off some of those golds onto being a gold yen trade rather than just a gold dollar trade. So we have the USD JPY in there as well. HVF method, the draw, 172. You've had a pullback for a short bit. We've called for 172 on the USD JPY. So rates going up, the new lady coming in, there's going to be some debasement in the yen. Let's drop to the daily. You could see you had a rising wedge pop out to the top, and you've had a kind of flag-based pullback. The yen, it's a great entry point. You could even put in localized stops. We are non-advisory. I'm just talking about how we trade and re-enter. You could put a stop on there. You could enter on there, and you hold for the 172 up top there. Massive risk reward trade, break and entry. Just saying, as we sometimes do. Non-advisory. That is it. Our community got in long a lot earlier. Let's just move that tool now. Every time you change the time frame, you have to reset it. So there we go. That's it. That's the jaw. That's the funnel. A beautiful break, a gap break, a return move to visit. Up she goes. This has been giving us non-stop. The yen should be part of your trade. We've made an absolute bundle. So outside of gold, silver, and platinum, the profits on metals, I would say the next biggest contributor has probably been the yen. Mid-year, Swiss franc, Japanese yen. On an upside, HVF. Absolute ripper. I'll show you it in a minute. Now we've pivoted to USD JPY. Yen dollar might get a little bit of firmness, got a setup here. If the dollar gets firmness, TLT starts going down again. TLTs, not so many people talking about shorting US debt anymore. So dollar gets a little bit of firmness, debt markets down. For debt markets to go down, the rates go up, the rates will drive the strength, relative strength on the dollar. It's not going to be a monster, but relative strength compared to the yen. In the meantime, the yen rates have been going up. They're going to need to slow that down. Slow the yen rates from going up, the yen starts going down in value again. That's how it all works. Confusing to some. I know it can sound a bit confusing, but it's been awesome. Here's some of the other highlights from the year that we gave you right here on this channel. Hit the like button if you appreciate trade ideas being generated for you by us, the Market Sniper team. And the upside HVF we showed you there, in case you didn't know how it works. Let's do a 3-day version of that one. You can see how that one ripped. You even got a beautiful little primer. We were talking about this in July. And you can see how you can take turns to smash this guy. I'm going to put it there just for quick draw basis. See how beautifully it made that target, and then up it's in overperformance mode. Overperformance mode indeed. There you go. In a nice little channel. The yen is in debasement. The yen is in debasement for having a lot of debt. Guess what? Everyone thinks the Japanese is more indebted than America. Wrong. You've been lied to. Unfunded liabilities. See America at 600%. Japan is at about 250 in normal terms and about 325 on unfunded. America is at about 130 on normal balance sheet claimed and at a 550 going on 600 unfunded liabilities. But while you are still dominant and the hegemon, you can still push the other weaklings around for a while, but eventually you will have the catch up that goes with it. Beautiful little wind up. We gave everybody this little setup where you could have broken in on that as well. And you could have got long there on the Swiss franc Japanese yen. So there's been a lot that's been going on, but gold has been the king. And you are all here for gold, silver, and platinum. Oh boy, oh boy. Let's get to the big guys. So many people want you to pivot to oil or to stocks or to something else, oil stocks even. And we're here saying, you married the beauty queen, stay with the beauty queen. The breakout over here, we covered in the summer, the Northern Hemisphere summer, this particular breakout, so clearly with everybody. Yep, there it was. And it went and it went and it went. So you might take a little bit of a rest here, a little bit of a bagel under here for gold. I wouldn't whale in right now. A little bit of a bagel run here, basis, basing ascending grind line. There's nothing wrong with doing a little bit of this, pull down and giving us another upside HVF that we'll be trading. Nothing wrong with it. Take a little bit of the sizzle out a little bit. They've stocked up the COMEX and the LBMA for a while. Don't worry. The same fundamentals will be back soon, but you could ease a little bit. You could ease a little bit on that, especially if you get a tiny bit of dollar strength. You could ease a little bit on the precious metals. But a lot higher. Silver. Oh my goodness. Silver is in the breakout of its life. It's the biggest upside HVF of them all, bigger than the Korean one. We also gave you the Korean one. It is moving very nicely in your favor. Let's see what else we spoke about with you. During the course of this year, our predictions are across the board: Japan, United Kingdom, Australia, certain European states, and America on their long-term debt will be at or near 6%, 5.75 and through. Good luck with the mortgages. They might not get priced on the 10-year anymore, especially if you're looking for 20 and 30. And Uncle Donald says, hey, have debt for 50 years. We'll do a 50-year mortgage. You can pay to the usury or the usury, depending on those. People complain when I say usury. Usury extractors, the Pharisees. You can pay to them for a lifetime, your entire working lifetime, and still not own your full home. That's right. Instead of rebasing and accepting financially leveraged assets are overvalued. They need to come down. The whole thing needs to come down. That's it. So we look at silver. Boy, oh boy, what a surge. A little bit cooler and calmer today. This is a 3-day chart, by the way, but we've got to remind you of the big one, This is a break for the ages, and catch-up season is very much on. This is a break of the ages. You should be stacking silver. Whilst it's not in complete unobtainium, you should be stacking silver. Boy, oh boy. Even divided by their bent CPI, we've drawn that one for you, but haven't done it recently. The urban CPI for all urban consumers, totally nonsense statistic. Damn, why do you not have that? Let's get back out of Tickmill and we'll have the other one. By the way, you can utilize Tickmill, having a great time utilizing them, trading with their accounts. If you're outside of, you can trade with them. European and only Australia and America is excluded. But if you are outside of Europe, you can even get much higher leverage, or the UK. So watch that. This is a huge break. This was your breakout. It occurred here. This is monthly. It occurred here. Bang. You've really just begun, friends. You've really just begun. I'm going to do the draw for you. Let's put it on a 3-monther so we can actually see those candles. They just look like black smears at the moment. Let's pull them through. This is on their inflation adjustment. And let's just say that's the beginning of a rip. That is a beginning of a rip for the ages. And we really want to warn you, this is the trade of a lifetime that you don't want to miss. If you want to know how to maximize your gains here, it's something HVF method is incredibly good at doing. So let's see it and let's draw this baby. Come on, let's get it in. Let's move him to the right, bottom right. Let's wait for this. It wants me to trend. Where's the trend bridging? There we go. So this is your journey path. This is your journey path. And bear in mind that BLS stats, which is Bureau of Labor and Statistics, absolute lie, is understated. So the catch-up will be far more than this. but it is the only number that is readily, easily available. You have just begun this break. You have come to our first interim target round about now. I've just mentioned gold might have a small pause for a bit. No biggie. You might also get some sympathy on silver for a pause here, but the next rip will be in percentage terms. If you were to have a pullback to that first interim, just to the second interim, you'll make another 151%. 151% is 2.5 times. 2.5 times. And then to target in the statistics terms from here would be 1286. Let's say you had no pullback. We just took it from where it's priced today. You'd be looking at 1,200%, friends. 1,200%. So 100% is 2x. 1,200% is a 13x. A 13x relative to your BLS statistics. And this is the first structure in a new trend where overperformance will apply. Silver, silver, silver. This, on its own, could secure your wealth 13 times. Couple of them, maybe. 10 of these 10 ounces. 10 of these 10 ounces. And who knows? Who knows? You could have just done one of the most valuable things you could have done. If you can get certificates, silver miners, oh my goodness, silver miners are literally mining money. The real miners of money, not the Bitcoin miners of NSA token, the real miners of money. That's right. That's right. All the crazy targets on Bitcoin were done by Saylor, Kaiser, Robert Kiyosaki, and so many others, Pompliano. If there's ever someone who's a big war, he's posting a whole bunch about war and attacking terrorists. What a NSA, CIA controlled freak. Listen, don't be buying into the concept of Bitcoin securing your wealth. Not in my opinion. I don't trust the people. You should look at the company they keep and who is shilling it. Sound money advocates of decades, some of them dead, Jim Sinclair, people we have on this channel that was of the Gatter era. Those are long-standing sound money people. You will go back to physical. You will recognize the value of physical, regardless of what technology tells you about digital. They will control you. You will be always running on their railway lines. You think it's your own carriage, they will switch off the railway lines and divert you to a dead end. That's the power they have. They own the lines. They own the lines. You don't own it. You might own the token that runs on their lines. They can close it down. They can close you off for running on their system. That's the power. This is its own system. I will take these from you for services rendered. I will take it all day long for our trading metamorphosis program, for our self-study, for all our amazing products that will help you build more of these. You could pay us in these. I'll take them before fiat. Before fiat. Our prices have been devalued. We haven't changed them in a long time. It's time for us to reconsider that, by the way. They haven't changed since 2017. Wow, it's time to start thinking because that dollar has debased. I might start charging in gold and silver ounces. That's what I do. So I'll just be handing discounts and you'll still end up paying more year on year. I'll be reducing it. That's what's going to happen. We will find a way. This is what you should be doing. That's the belief system I have, fundamentally backed, because belief is not a word I utilize. By the way, there will be a point to sell silver. There'll be a price. There'll be a value of the gold-silver ratio where I say enough, turn it into agricultural land, turn it into equities that have been hated again, that are paying real earnings and dividends and are trading real cheap. Trust me, it's not forever, but it is certainly now for the epoch that we are in of debasement, and it is far larger and far longer than many will go. I think Burry is broadly right. So small screen says, so Burry is right. I think he is right. I think he's usually early, but he's right. He's no fool. Michael Burry is probably right on both Bitcoin and on a number of things. I think Bitcoin has topped. I think you could go down to 30 or 40. if it doesn't go to zero. And I think the micro strategy situation is deeply unstable and is typical of a Ponzi being built upon one of the most volatile assets. How to do that? I can tell you, as someone who's looked at property companies, listed property companies in America, in South Africa, everywhere in UK have often traded at 30, sometimes 40% discount to their net asset value. Because people are going, what are you making? You're not interesting. There's other things going on. Tech is going on. Why do I need to buy your share? You tell me your property buildings are worth X, Y, Z. Even to earnings, it's worth, backed by earnings, because the assets are boring. They're not doing anything special. There's not a possibility of massive growth. You can't increase your rent. Imagine what happens to trade to net asset value can happen on a crashing asset that is now rolling into a potential bear market where it can lose an immense amount and go down to 30K. People will price that in and they will trade it down to net asset value. That would be very, very fatal. Francis, EXE has stopped working. Microsoft is looking for a solution online. I'm not sure I even know what the problem is. What do you think XRP and XLM Tron can do in 10 years? Very well. We'll cover that on Crypto Sniper. We'll do an update on Crypto Sniper. Micro tragedy, says someone. I think he means tragedy. Mr. G there. Yeah, are you going to charge 30 pieces of Judas silver? I think we could probably get it even lower than that, and it won't be Judas silver. It will be Revelation silver. It will be Savior. It will be John the Baptist silver. Bitcoin tulips mania will not go forever. Yeah, people will say that it's 13 years. It's not a tulip mania. It's been sustained by people that have disproportionate access to money to facilitate the USDT inflation Bitcoin driving system. And they've put a lot of tech and everything onto it. So that's silver. Let's talk about something else. Let's talk about a miner. In fact, let's just do an energy. Not oil. Let's do natural gas. This has turned very strongly finally. Let's get a better chart with better history. Let's do futures. NYMEX will do. So this is natural gas. So this is part of your problem. So you've got beef that is shooting up. You now have natural gas. Oil still lagging. By the way, natural gas is outperforming oil. And we still think, even though oil will eventually turn because of the debasement of the dollar, it will underperform others in gold ounces. It can still go lower in gold ounce terms, even though it's no longer going down in dollars, if you can understand that. So there was your left shoulder, your head, and a scraggy right shoulder, a bit messy, but you are trading up in natural gas. There was a head and shoulder here that was part and parcel of a massive sell-off. You're heading back up to that neckline right now. This is all part of, not that there's a lot of work going on and there's excess natural gas being consumed, it's just debasement of currency. This is debasement of currency, commodity bull. Look at coffee, softs. And I will point to coffee. Yeah, you know, coffee trees, they don't just grow on trees. I dare say, coffee beans, they don't just grow on trees. They take a while to they take 10 years, I think, before they are meaningfully productive when you plant new trees. Production doesn't just come online. And you can see here how these softs have moved. This is how the softs have moved. This is all dollar. This is all dollar, friends. This is all different versions of the dollar story. 87 there, 367 today. A little bit of a head and shoulder even, could technically trade off there on a small time frame. But if you look at 80, 78, 87 to 367, when was the 87? It wasn't that long ago. It was in 2019, May 2019, 87 to 367. It's 4.5 times for the raw commodity since May 19. So we're talking 6.5 years. 6.5 years, 4.5 times. What does that tell you about? Do you think everyone's chopped their coffee trees down and there's a glut of supply? I'll tell you no. The cheaper tree, the Robusta bean, what did it do? 2019, it bottomed in 2020, 1,076. It's now 4 times that, going on 4 times that, 4,200. Very close to 4 times that, and it's been 5 times it. 2020, mid-year, so that's 5 years, 5.5 years, 1 year less, 4 times. 4 times more costly. You are being squeezed in everything in the supermarket, and none of this is being truly reflected in your CPI inflationary numbers. That's a fact. It's a complete fact. CPI is the last bastion of propagandized lie that has not been fully debunked like the labor numbers under Biden. We proved that. We kept telling you it's an overstatement, that you were in recession. You're in a recession. They tried to tell you the recession wasn't a recession because of employment. We told you it was a recession. All those numbers now debunked and ripped out. They lied, they lied, they lied. I'm telling you, they're lying again. Your CPI is the biggest lie. You change the baskets, you change the products, you change the volumes, and suddenly you can manufacture a lie. This is the greatest lie, that you're at a 3% inflation rate. Absolutely on every level. Your beef prices don't do that. I've seen people show me New York strip beef, same weight, same cut, literally 5 years apart. You've gone up nearly 3 times. You can't have everything you eat going up 3 and 4 times and be on 3%. It isn't accurate. It just isn't accurate. Over 4 years, over 4 to 5 years, you can't do that, particularly if you look at the prices at the bottom of 2020. Yeah, stay out of schmuck bucks. Don't go there. And you can make organic coffee at home for 20% the cost of the bucks. Yeah, so they're lying to you on a lot of things, friends. They're lying to you on a lot of things. So we want to come back to the rates, and then we're going to finish. Any last questions, you feel free to drop them. It's glad to have you here. There's a number of you watching. Let's just see how many likes have we got. We've got 589 likes. We appreciate it. 1,400 coming to watch. So thank you for today. Let's have a little look at this couple of things. We want to show you stocks by gold. I really want to, this is quite an important one. I'm not sure I've shared it. So let's just put it on SPY. In fact, I'm going to go gold first. XAU USD divided by SPY. And we're going to do that one. So in case you thought the relative valuations of stocks to gold had gone to gold's favor, and that it was a top. And I've said, yes, we might have a little pullback on a bagel. Here's where you were in 2011, which was a half. You're at 16, you're at 6 times, you're at 6 today. So you've got 2 times and a half again, and 2/3, 2 and 2/3. Still to go, where you just match a half bull run like 2011. This goes imminently higher as part of a reversal. This is where you're reversing. This is where you're currently winding up. We're on a monthly chart. If I drop it to a weekly, you can see this is winding up. This is going to give you an unbelievable setup. You want to be out of stocks and in gold, unless, of course, those stocks are miners. And they'll be holding up what the SPY's performance will be, because many other things will be down. So yes, we might come off a bit. We might come like this. You will be breaking our special number. For those of you who can't see, the devil's number, 6.666 over here. Every time rejected, heads, shoulders, squeezing higher, gold will overperform. What about HUI, something like the gold miners index? Wow. I mean, miners still not getting recognition. Why? Because they're not big enough. Is it HUI for gold miners index? What's the best? What's your favorite miners index? Trying to think. I thought it was HUI. Let's have a look. Goldbug, it is HUI, yeah. Divides by. So it's only had a couple of jabs from a low. Not a lot of history, it has to be said. But I can certainly state, without having the hard facts in front of me, that this was a lot higher in 1980. That would have been way up there in 1980. Way up there in 1980. And you are, unlike gold, which has started to base and didn't go as low as 99 and 2000, you are far lower. This is the low for miners right here. I don't see you running that any further to the downside. I will pop past First Majestic. Yes, I will do it. So I will pop past. But this is the beginning of rejection here. And the percentage that miners hold of the SPY is so piddly. I just want to point out it's 0.004. 0.004. 0.4%. 0.4%. It's unbelievable. It's unbelievable, and it will change. So First Majestic, which bought a lot of ounces in the ground, nice bottoming here. So I'll do it on the different time zones. I'll do it first on probably the biggest. So for us, you're in a breakout. Let's put monthly. You had a beautiful little HVF here that was saying First Majestic was going to be coming back into the game. That's on a lower time frame, but the monthly is like this. This is how we break it down. This is a complex top. You sometimes get that. You get a hollowing in the middle, and then you made a 3, and we think it's a rush 3 because silver is quite strong. So we think First Majestic recently broke, and that's a funnel. So a stop over here and a go long over there is good. And I think you had a technical test of that and you went back in. We called, the reason we're allowing for such a short pullback on our third impulse, this is our second, that's the first, is because silver was needed that once, twice, 3 times. The knockback on the third time was going to be much smaller, and we got that. And then it turned and started going higher. We say you're at the lady moment now. We feel you've got a sufficient knockback, but you have to be on a lower time frame to see it on silver, because you just pulled back inside the candle and now you've traded back up, and it was all within the same month. This is how I feel with First Majestic as well. So the value is 10x. It's going to be 10, maybe 11x. So let me put the draw on for you and tell you, and that is not our close point. It would be a take profit point. So we'd actually expect higher. So you had that fake in and that trade back into the funnel. So it's called a break and feign. You can buy it at 14.4, and our target is 144. It's actually 145. And that's a target, as I say, for partial closure. So First Majestic, at minimum, 10x's for us. And I am a holder of it. At minimum first, and you get this pause now with gold and silver. If we get a little bit of a pullback, miners get disproportionately downward hit. People aren't believers. They see miners purely as a function of the gold price. Any sign of a small turn back on gold and silver, they can go down 1%, 2%, 3%. Miners go down 5, 6, and 10. Especially one that's moved a lot, where they want to bank profits for the year. You can buy the stock in the funnel, possibly at the midpoint. It might come back down to 12.94. And you'll 50% close your position at 145. That is huge. And if you know how to trade options, you could really buy out of the money options at 20 for real cheap when you're trading 12. But you need time. You need to go all the way out to 2028, January, as far as you can get. Leaps, as they're sometimes known. Don't get bucked off the bull. No siree. Correct comment. Yeah, you can get back into it. AG is currently down 4% today. Yeah. And it might come a little more. It'll be super sensitive to silver price, and I think it might come a bit more. And silver come off. Silver hasn't come off much today. If we just have a look at XAG, USD, how much it's come off for the day, I don't think it's anything that should be intimidating anybody too much, but it's a red candle today. So how much is it down from the close? This is a really small beer. You closed on Friday, the 5th of December, 58.34. You're now at 58.10. You're 24 cents down. It's 0.42% down on silver. And someone here has just told me that First Majestic is down 4%. 0.42 down on silver, 4% down. The value that miners represent in this disbelief stage, because it's still a disbelief stage, you're talking about an industry that is 0.004. It's literally 0.4% of the entire stock market. It hasn't got enough to even be 100th of the entire stock market. Wow, you're down 10 times more on First Majestic on account of the slight softening. So this period, a little bit softer. We're not about to just rip like a lunatic on silver. Listen, we showed up and told you the day it would rip, the day before it would rip. Next day, you got commodity exchange shut down for 10 hours. We came up and told you before it happened, get it on before it's about to happen. Next day it happened. We streamed the day after. You got in between the bookmarking of 2 live streams by yours truly and the Market Sniper team. Hit the like if you appreciate that. You got told you're about to rip, and that's exactly what happened. And they were doing a whole bunch of shady stuff, OTC paying 4 or 5% more, $1.70 more to shut major liquidation shorts. The repo market stress may not only be the basis trade of the Cayman Islands buying treasuries on behalf of America that's got no buyers left. It can also be banks needing collateral, the drawdown on the repo markets by banks needing billions, shipping massive losses on shorts on silver. That could also be part and parcel of the repo market stress. Repo market stress is bad. It requires liquidity. It has been a precursor to major demand-destroying events. You have an AI, a private credit system. You have a lot of ideas there that we've spoken about already before. I'm not going to go into the weeds on that. You can find out join the community, have a chat, come to our live trading day on the 16th. The guys will have a link ready for you to share later on. That will be on our X profile, the Market Sniper. You can follow there and you can check it out. Scaring people out of the miners. Fed day this week, because of Fed day this week. Yeah, I don't think anyone should be scared out of the miners. And I think dips like this represent investing opportunities. They're disproportionate and they're high value. Particularly as XAG, whilst didn't always buy the best quality, ensured they bought ounces in the ground and had a very acquisitive approach. Keith Neumeyer came from investment banking environment and said, we want ounces, we need ounces. Okay, good. Thanks very much for coming on, guys. You can see the Market Sniper profile being shared in the comments there. We will expect greater. We'll do Heckler quickly because we've spoken of it a lot. It's another favorite of mine for you. I'm watching the comments. Also a little off there. Having a bit of a sell. Again, part and parcel of silver slowing down, disproportionate to the move in silver, making the value. Stack miners, 5.7%, 5.76% on a 0.4% down move. Nah. On a day-to-day basis, they're all underperforming, and they're going to be cash hemorrhaging cows, as the silver market reasserts, goes to 90. What do you think the stock will be when silver's trading $91 at our second interim on the upside HVF, with silver currently at 58? Wow. What do you think? It's going to be more than double. It should be more than double. It's got to climb. It's got to climb. It's got to climb. But will it? Maybe it'll only be 60% higher. But it's going to be higher. That's for sure. But at some point, when people realize that this is hyperstagflation is the thing, it's going to remain the thing. It's an epoch. It's an entire era of debasement, because the debt is so large, and the only thing that wins is physical things that don't disappear. This is the same size today that it was yesterday. It weighs the same. It feels the same. It is the same. It is consistent. It is consistent in a world of debasement, lies. It is consistent. It shows up the same every goddamn day. That's how it works. And those miners will be pulling it out the ground, and the product will show up the same every damn day in an environment where the fiat is debasing, the debt is debasing, and the product is needed. That is key. It's needed on an ever greater level, and there is a shortage of supply above ground. This is your grand trade. Make sure you combine physical with your miners. Don't be all in on miners. Don't use options unless you've done some training. All of what we say is non-advisory. Join us for our live trading day, and don't forget to follow our sister channel when we update on crypto, The Crypto Sniper. Subscribe over there, and also the X profile, The Crypto Sniper, as well. But we don't love it. We recognize its role and what will work. It's going to get debased as well, I think, in a fear market, if it's the end of the Bitcoin bull, which I suspect it is. So there's interesting developments going on there. Till next time, thank you for checking in. To the 1,400 of you that came on, bye-bye for now, and we'll talk again soon. Bye.